The employment report, wages soaring, the unemployment rate remains near an 18-year low. Overall, job creation beat the expectations. In fact, we saw payrolls up 201,000 last month, boosted by hiring in construction, wholesalers, professional and business services. President Trump touting those numbers today. The strength of the economy, really pointing it out at a rally in Fargo, North Dakota. Take a watch.
We had great jobs numbers this morning. They were just announced, and they were fantastic. But the one that stuck out to me was the wage. I mean, people are starting to be able to live. So not only unemployment, but the wages are starting to go up for people. More Americans are now employed than ever before in the recorded history of our country.
So the question, are we really in the midst of a virtuous cycle? And if so, will it continue? Here now to discuss, Mark Hamrick. He's with Bankrate.com. They're senior analyst, economic analyst there. David Nelson, Belpointe Asset Management's chief strategist. Kevin Kelly, Benchmark Investments managing partner. And Rick Ungar, the Pod Complex host. David Nelson, I haven't seen you in a while.
Yeah.
I thought it was a phenomenal number. I thought it was better than expected, particularly after the ADP was somewhat disappointing yesterday. And I think President Trump is right. Wages seem to be the story.
I thought that was the key to the story today, 2.9% year on year. And that's a dynamic we have not seen for a long time. I actually think it's a lot higher than that because we have a record number of young people coming into the workforce. They're coming in at entry-level wages. It's probably a bit higher than that.
So, jump on in, Rick.
Look, I mean, doing better is great. I'm all for it. But we do have to wait for one more number. This is the nominal number, 2.9%. Okay, not as good as the days of the dot-com boom where we were seeing 3.5% year on year. And you would think, and what the president tells us is the greatest economy ever, we could match that. But the number that we need is the actual wage increase number. Last month, June on June, 2.7% nominal increase. Actual increase, minus 0.1, meaning that you went nowhere
Rick,
in
no matter
year.
what the number is, you would say next month we need the number for right-handed people who live in red states.
Wait,
but honestly,
let's talk
though,
about what's real there.
This is real because this is an authentic number. It's a number. It's like the unemployment rate, right?
Actual.
And it's the best since May of 2009.
If the actual number is up, I'm going to be thrilled. If I actually see that wage earners went from last year at this time to this year at this time, and they actually have more value in the money in their pocket, yippee. But what we saw last month is they have less.
The competition is pretty fierce. You've got CEOs out there offering all kinds of packages right now. I just saw Rockwell this morning. They're actually giving out tuition and making that for workers coming into the workforce for the first time ever.
It's great.
Was that for just left-handed voters in red states or no? Kevin, let me ask you because
they're all left-handed.
There's a whole bunch of data points out there. This is one though that Wall Street keys in. This is one that a lot of people key into, and the 2.9% number was the biggest in this read going back. Is this sustainable? Is this because it should have happened a long time ago, right? I mean,
it should have happened a long time ago. But to answer your question, yes, it's sustainable. And one of the reasons why is I look at one of the leading economic indicators that came out gangbusters, and it was the highest of the year. That's the ISM manufacturing. And then when you dig down deeper, you had new orders index, which was at an almost year high as well. So that presages to companies investing into their businesses. Well, if they're investing into their businesses, what's a key component? People. They're going to have to pay their people for their new orders. So this is a sustainable 2.9%. We've seen the wages. We talk about it was 2.7 before, it was 2.6. Now it's at 2.9. What is that trajectory? That's going up, especially with the leading economic indicators like the new orders.
Let me bring in Mark. We got a remote guy guessing, and he's a good one from Bankrate. Mark, it's sort of it could be a double-edged sword too. If it goes too fast, then it awakens the Federal Reserve, and they do their best to slow it all down. So, we talk a lot about a Goldilocks economy. This could be as close as you get to it. If the Fed's willing to let people get a 2.9% increase in their wages, I think it would be fantastic. But do you think it's sustainable?
Oh, I do. And as you all have said, it's long overdue. This report's a lot like Mama's home cooking. We really shouldn't complain about it. But we do need to see more reports like this. And we have had some head fakes in the past where we had a 1-month bump up in average hourly earnings. But this is consistent with the employment cost index. But let's think about some things that are out over the horizon. We do have a Fed meeting later this month. As you referenced there, Charles, the Fed will raise interest rates. We'll probably raise rates again at the end of the year and perhaps several more times next year. So we do have some things that are going to serve as a damper for the economy, and we know that the benefits of the tax cut begin to diminish over the coming 18 months or so as well.
Rick, to that point, people who don't like to see this, or there are some neutral economists who are saying maybe this is the sugar high part of it, but you do need the economy to spark, right, to sort of come to life. If it's going to be sustainable, it's got to begin now.
See, I actually don't think it's the sugar high part of it. I think there's more to it than that, and I think it's a good thing. You know, there's a tendency to think if I bring up a potential negative, I must not like this. Maybe the president will get credit, and I don't like it. No, 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 no. You show me wages are going up for an American. We get to that 3.5 area number, which we could. I will come on this show and lead the cheers. It's that important. But remember, we have a lot to catch up for. This has been a problem since the mid-1970s. Workers in America have to start catching up on the wages they haven't been getting.
Well, speaking of credit, right, we had this sort of dueling press conferences, President Obama and President Trump. And, President Obama took a couple of opportunities to suggest, hey, this is only a continuation of what he's done. But there are some significant differences between regulatory approach, between tax policy to believe that. But it is going to matter who the general public believes, and how does that going to work out there?
I think the data, certainly points to this president. Look, I give President Obama all the credit that's due. We were coming from a financial crisis. But the concept there and the mindset was that 2%, that was it. We couldn't possibly get any higher than that. And you had economists like Paul Krugman preach that to the choir out there. And suddenly President Trump comes along, you know what, we can do better. And you know what, the data is showing that. We just had a consumer confidence number, 18-year high. So obviously, I think this employment report is just confirming the data that we're seeing, both in corporate and real America.
Well, let's just take it back to his administration, and everyone was talking about, including Larry Summers, this is the new normal. We shouldn't be expecting 3% GDP growth, and you get a new administration. What do? They deregulate, they cut taxes, they stimulate the economy, and what's happening? You're seeing it play through. And more importantly, the NFIB, the small businesses are the ones that are increasing wages. They're deploying their capital into their own people. They've said basically they're raising wages on at least a third of their workforce. And so it's not just a top-line corporate America story. This isn't an S&P 500 story. This is the Russell 2000, the small caps. This is small businesses that are actually increasing wages because Mark, they're the ones that create jobs.
And Mark, also productivity looks like it's starting to come to life here. Greenspan loved to talk about productivity or the productivity miracle, another critical component of our economy that a lot of people thought probably could never come back. Could that be a good component going forward?
Well, we need to see more positive reports in that regard. You cannot have substantial wage increases without substantial improvements in productivity. And I would just, to throw a little bit of caution into the discussion here, if you look at what the New York Fed is projecting in the current quarter and the fourth quarter of the year with what we already know about Q1 and Q2, we're still probably going to end the year with just shy of 3% growth. So fingers crossed we can do better than that and bring some better wage growth with that.